My name is Jack Hanney, and welcome to this special holiday edition of The Insider. It was reported earlier today that the export ban on NVIDIA chips to China was lifted. And if you were to look over this past year, the volatility in the stock market based on tariff trade wars, think of Liberation Day, export bans, rate cuts by the Fed, whether or not they'll be cutting rates a quarter basis point, a half a basis point, whether or not they'll be pausing, as well as this circular investment into AI. Now, Professor Scott Galloway says that there will be a reckoning within the next 12 months due to this massive investment into AI that has never produced any returns, certainly not returns that would warrant the investment. There's also questions about whether or not there's going to be enough energy to power AI. There's also a question about the data centers and the build out that would be necessary to power AI, and whether or not there's enough energy and if the energy source can even support this investment that we're seeing into AI. Everything looks precarious when you look at the stock market. 40% of the gains in the S&P are due to the Magnificent Seven stocks. So Professor Scott Galloway, who's a brilliant economist and investor, said that tech stocks could go down by half. Last week, Vanguard warned that the 4% rule will not work for retirees due to a lost decade ahead for the stock market. Again, that is Vanguard that is warning due to a lost decade ahead for the stock market, the 4% rule will not work for retirees. For those of you that are approaching retirement age, this is a concern. Meanwhile, gold and silver, again, the best performing asset classes of 2025. Gold was up 60% in 2025. Silver up 100% in 2025. Forecasts for gold are $5,000 an ounce. Goldman Sachs, JP Morgan, Jamie Dimon said gold could easily go to $5,000 or $10,000 an ounce in this environment. Then JP Morgan came out and said the metal could double. Bank of America is calling for $5,000 an ounce gold and $65 an ounce silver. We are also running into significant supply deficits for silver. This year alone, they're saying that supply deficit could reach as high as 200 million ounces. So going into 2026, they say that will be the year for hard assets, physical gold and silver. Vanguard warning of a lost decade ahead. Goldman Sachs said prepare for paltry returns in the S&P over the next decade. And Goldman Sachs, JP Morgan, Bank of America, Bloomberg, HSBC are all forecasting $5,000 an ounce gold, $65 an ounce silver, if not significantly higher. I am not a certified financial investment advisor, nor do I give tax advice. Please visit us at www.patriotgoldgroup.com or call 1-888-488-5190. Put some gold and silver on your holiday list this Christmas. It'll make for a better 2026. We look forward to hearing from you, and I look forward to speaking with you next week on another episode of The Insider.